All right, students, this is ARD, your accounting coach. Today we will be discussing about control accounts. Control accounts, see, there are two types of accounts for customers and suppliers. Individual accounts for customers, such as Mr. A's account, Mr. B, Mr. C, they are in sales ledger. Now, what is a sales ledger? Sales ledger is a book containing T accounts for customers. Then we have another book with the name of purchase ledger. Purchase ledger consists of T accounts for suppliers, that is Mr. X, Mr. Y, and Mr. Z. Now, having said that, the account for debtors and creditors individually, if the business grows in size so as the number of customers grow and the number of suppliers grow, so we need to have some check and balance on these sales ledgers. So to make sure that there are no errors or fraud that may be occurring in our accounts, we make collective or combined accounts for debtors and creditors. A collective account for all debtors is known as sales ledger control accounts. Short form is slca. Now slca is an account for all debtors combined. Now we have two sets of account. Individual accounts are in sales ledger for customers and purchase ledger for suppliers, and combined account for customers as sales ledger control account is in general ledger. Now altogether we have three ledgers. Sales ledger contain individual account for customers, purchase ledger contains individual account for suppliers, and general ledger is the ledger account or a book containing all other T accounts including sales, purchase, return inwards, return outwards, asset, liability, income, expense, blah blah blah. It contains every other account other than customers and supplier individual account. So slca is also in general ledger, and the suppliers combined account, which is known as plca, is also in general ledger. So we have three ledgers: sale ledger, purchase ledger, and general ledger. Sales ledger contain individual accounts of customers, and general ledger contains slca, that is combined account for all debtors. This is made so as to keep a check, so there are no errors in the accounts. The fraud can be minimized, the errors can be minimized or managed. We make sales ledger control account. Now, sale ledger control account is a debtor account starting with balance BD. As you are already aware, a debtor is an asset for the business, customer is an asset. So opening balance, that is balance BD, comes on the debit side. If the balance BD is on debit side, the balance CD will be coming on the credit side. Balance CD carried down is the closing balance, and balance BD brought down is the opening balance. So these are normal balances for any debtor account slca. Now what is this balance BD credit balance? This is known as minority balance or abnormal balance. Now what is this minority balance or abnormal balance? See, my dear students, normally the debtor is an asset. Means we are asking or our debtors owe us money, that therefore there are an asset for the business. But there may be a situation that we have to pay to some of our debtors. Why do we need to pay to our debtors? There are reasons written in this. Due to over a duplicated payment by the customer, means our customer has paid us more than he owes, or he or she owes us to us. He owes us 1000 and he has paid us 1200. Now we have to return back 200 to him. This is known as minority balance. Or he or she may have given us duplicate payment, means by mistake he has given us 1000 two times. Now we have to return back 1000 to him. Therefore it is known as minority balance. Secondly, a customer has bought goods from us on credit, then for some reason he has returned the goods to us, but he have already paid the money for these goods. Now what we need to do, we need to pay back the money due to him, that is our minority balance. Thirdly, the customer has paid us advance but has not yet bought the goods, and now he decided not to buy from us, so now he is asking for a refund. Therefore this is a minority balance. If there is minority balance, it will come on credit side. because it is the liability for the business. If the minority opening balance comes on credit side, the closing balance will be coming on debit side. This is the minority balance. But in a debtor account, the normal balance are always there, opening as well as closing. But the minority balance can be there or it can't be there. The example is the same, that if you live in, for example, we are living in Pakistan, it is a Muslim state. So in every city there must be Muslims because it is a Muslim state. It can be that in some states there are non-Muslims, minorities, or there can be some cities that there are no minorities. So minorities can be there or cannot be there, but the majorities will always be there. So this is the example for minority balance. So now let's move to other transactions. Sales. Whenever we are selling goods on credit, our debtor increases. The entry will be debtors account debit and sales account credit. So this SLCA, sale ledger control account, this is not a sales account, this is an account for our debtors. Debtor increases, and in the reference you'll be writing sales. So this is credit sales, and the cash sale never comes in a control account. Because if we sell goods on cash, we'll be making entry cash debit and sales credit. So in a cash transaction, debtor will never comes there. Debtor will always be created. Debtor will always be born when we are selling goods on credit. If we are selling goods on cash, there is no need for a debtor. So we'll be writing always a credit sales here and not the cash sale. But we won't need to mention the credit sale because the account name is always sale. We'll be writing the account name that will be using opposite to this. Now bank, whenever the debtor pays us the money that he or she owes us, will be making bank debit, will be debiting the bank and will be crediting debtor account. Discount allowed, if the customers pay us money before the due date, they'll be eligible for some sort of discount. This is known as discount allowed. Discount allowed is an expense for the business, will be debiting discount allowed account and crediting the debtor account. Then we have return inward, also known as sale return. Whenever the customer return goods back to us for some reason, maybe the goods are not up to the required quality, or maybe there's a different design or wrong size, wrong color, we'll be returning the goods from customer. So receiving the goods back, the return inward or sale return will be debited and debtor account will be credited. Now bad debts, are also known as irrecoverable debts. If the debtor is somehow for whatsoever reason is unable to pay the debt that he owes to us, will be deducting the debtor account and will be debiting the bad debt account, which is an expense account. Bad debt will be debited and debtor will be credited. Now Contra plca, what does this mean? Contra plca, Contra plca means one of our customer also becomes our supplier. Means he also owes us money and we also owe him the money. Why? Because he bought the goods from us, for which he needs to pay us the money, and we also bought some goods from or services from him or her, so we also need to pay him the money. So rather than he should pay us the money and we should pay him the money, so we'll be cancelling the transaction. This is known as Contra plca. Now I always give an example to my student that one of our student is, for example, Mr. Ali. Mr. Ali is my student, and I teach him, I tuition him, and I charge 5,000 rupees per month from him. So every month he needs to pay me 5,000 for my services. Now what I did, I hired Ali as a teacher for my son to teach my son. He comes to my home and now he is my supplier. So Mr. Ali is also my student, and Mr. Ali is also now Sir Ali, who is a supplier to me because he is giving tuitions to my student. Maybe I have hired him for 8,000. I want to pay him 8,000 every month and he needs to pay me 5,000 every month. So rather than I pay him 8,000 after he paying me 8,000, so what we need to do is to cancel out the transaction, the amount that is similar in both. 5,000 is the lower amount. We need to make an adjustment with the lower amount. What I need to do is I need to credit Mr. Ali student account and I need to debit Mr. Ali teacher account. So now I am crediting slca and will be writing reference of contra plca, and similarly when we'll be discussing plca account, we'll be debiting contra plca and crediting contra slca. So debtor account is credited and creditor account is debited. SLCA is credited, reference will be contra PLCA, and PLCA will be debited, reference will be contra SLCA. So I hope we will be discussing this in future when we'll be solving the question. It will be much easier to understand. Now, what are the other transaction left? Bank dishonored check. Now, what does the word dishonored check mean? Dishonored check means the bank is unable to honor the check. Why? Because the customer does not have the required amount in his bank account, or maybe the check is expired after 6 months, or maybe the amount or is written incorrect. There is some rewriting on the check, or the amount in digits and the amount in words does not match. For some whatsoever reason, the check is dishonored. Whenever we will be receiving check from our customer, we'll be debiting bank and will be crediting debtors. Now we'll be reversing the transaction, will be increasing debtor, again debtor will be debited and the bank will be credited. Reverse transaction. Now see, there is a bank here on the credit side and the bank is here on the debit side. These are both different. These are the checks that I have received from debtors, and these are the checks that are dishonored. We'll be writing it on the debit side. Then interest charged to debtor, as you are aware, if our debtor does not pay us on time, so we need to make sure that the next time he pays us on time, so we will be asking for some extra amount, some sort of penalty or interest charges. This is interest charge to a debtor. Then if we are charging interest to a debtor, we will be asking for more money. This means if we are asking from a debtor for 1000 and the due date has passed and the debtor has not paid us the money, now we'll be charging 10% extra. Now we'll be charging 100 extra. So this 100 increases our debtor. This is interest charge to debtor. Bank refund to debtor, then this is the last transaction, refund to debtor. If one of our debtor has paid us the extra money, that is, this becomes our minority balance, we need to refund him back the money. So what will be the entry? Bank will be credited, will be crediting the bank and will be debiting our debtor account. So bank will be credited. This is simple. Why are we debiting our debtor? Because the debtor is our minority balance. This is a credit balance. This is a liability, and whenever we will be decreasing our liability, we will be debiting it. Again, if the balance CD is not given, we need to calculate the balance CD. As you are already aware, we cannot calculate two balance CDs. If balance CDs are not given, we need to calculate the normal balance, that is debit balance. Opening debit balance comes on debit side, so closing debit balance will be coming on credit side. Or if the balance CD regular balance is already given, we need to calculate the minority balance. So balance CD becomes balance BD onto the next period. So this was sales ledger control account. Now let's move forward to purchase ledger control account. Purchase ledger control account, that is PLCA, is suppliers account. This is not one supplier account, this is account for all suppliers all together. So this is a combined account for all creditors, and this PLCA is made in which ledger? This is made in general ledger, because we already discussed the individual suppliers accounts come in purchase ledger book, and the combined supplier account, that is PLCA, is made in general ledger. General ledger is also known as nominal ledger. Now, as you are already aware, PLCA is a creditor account, and creditors are our liability, which are represented by a credit balance. The balance BD will come on credit side. If the balance BD comes on credit, the balance CD will comes on the opposite side, that is debit side. Now in PLCA, there can also be minority balances that are abnormal balance. So why are there abnormal balances? Because there may be some suppliers whom we have paid the amount in excess of what we owe to them. We owe a supplier 1000, and for instance we have paid him 1500. Why we have paid it? Because maybe by mistake we have paid in extra, or maybe by intention we have paid in extra. therefore we can buy goods in future, but now we have decided we do not need other goods from this supplier and we are closing the relationship with the supplier. So therefore we are asking our supplier to return back the money that we have paid in excess of what we owe. So this is our debit balance. Or maybe we have purchased the goods on credit and after paying the amount we have returned the goods, purchase return or return outward. Now we are again asking the supplier back the money that we owe, he or she owes us. So this is the abnormal balance. Abnormal minority balance comes on debit side. So the opening minority balance comes on debit side, the closing will be coming on credit side. The closing always reverse. Now whenever we buy goods on credit, the purchases increases our liability. The transaction will be, the journal entry will be purchase debit and liability account will be credited. And if we are paying our suppliers money, it will be coming, bank will be written on the debit side, the entry would be liability will be debited and bank would be credited. Say if it is not mentioned that payment will be made through cash or check, we'll be writing bank always, because businesses by default use the bank account as a primary source of payment. Normally the businesses does not deal in cash. So but if the question specifically mentions that the payment is made through cash, we'll be writing cash, hence else we'll be writing bank. So this purchase, this is credit purchase or cash purchase? This is always credit purchase, because cash purchase is never shown in liability account, because liability is born or created once we buy goods on credit. If we buy goods on cash or through check, we'll be making entry purchase debit, cash or bank credit. So this purchase is always credit, but we won't be writing credit purchase. Why? Because it is understood that the purchase is always credit and the account name is purchases and not the credit purchase. So therefore we'll be writing purchase. Then there is the transaction discount received. If we pay our suppliers earlier than we have promised, the supplier as an incentive gives us discount. This is discount received. After receiving the discount, our liability will be decreased. Therefore liability will be decreasing and discount received, which is an income for the business, is credited. The entry will be liability plca debit and discount received credit. Return outward, if we are returning goods to a supplier due to some reason, because the goods are faulty or we do not need it, or we ordered it by mistake, or there is some wrong size, wrong color, wrong specification, we have returned the goods, which is also known as purchase return, our liability will be reduced. We will be debiting our plca liability account and crediting return outward account. Then again Contra slca, we have already discussed the example. There is a student, Mr. Ali, who is also now my son's teacher. He is our customer, he is my customer, he is also my supplier. So I also ask money, fees from him every month, 5,000, and similarly he also asks for fees with me to me, that is 8,000. So rather than me paying him every month and he paying in return back to me, will be cancelling the transaction with the common amount. The common amount or the lower amount was 5,000. Will be debiting our liability and in reference will be writing Contra slca. In slca we credited slca and now we need to debit the plca. slca will be credited with the reference of Contra plca and plca will be debited with reference to Contra slca. Again the regular balance CD comes on the debit side and the abnormal minority balance comes on credit side. If the balance CDs are not given, we need to calculate balance CD, but we can only calculate one balance CD and we cannot calculate two unknowns in a T account. So if no balance CD is given, we always need to calculate the regular balance CD that will be coming on debit side. And if the regular balance CD is already given, maybe in the examiner asks for this abnormal balance CD, this needs to be calculated. So students, I hope I was able to explain you in the available time the control accounts and the purpose of the control account. So the purpose is to make sure that there are no errors or the errors can be minimized and there is a check and balance. So sales ledger or purchase ledger are made by different person and the control accounts made are made by a different person, so that to segregate the duties there are no or less chances of errors and fraud. And we can also calculate the total credit purchase and credit sale with the help of control account. This also help in making financial statements. Sometimes the examiner also asks for the reasons or the purpose of preparing control accounts. These are also available in the many theoretical books or the past paper exam questions. So students, if you like the video, don't forget to share the video with other accounting students and your friends. And if you think this video was helpful, you must share it, and you can also comment on the video and tell me that was I able to help you with this. And kindly ignore my grammatical mistakes, because I am not an English teacher and I've just started making lectures in English for students outside Pakistan. Basically, they can take help from this. Thank you, and don't forget to subscribe my channel. Allah Hafiz.